Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge. Hope everybody's having a great trading session, and I'm just gonna pull up the bias chart here. It's been pretty quiet since I've been awake. The euro continues to slide, so does the cable, but a lot of these commodity currencies are holding up. I mean, the dollar Canadian's weak, the Aussie's strong. Aussie's up, near its resistance again. I'm, just sitting here monitoring, the markets. I don't think there's a whole lot to do right at this moment in time. But I do think that the reversals that we've seen, like in the euro dollar, are fairly significant. I do feel that way, and that doesn't mean that that the euro dollar can't go up from here. It's just it was a really big rejection. Let's go ahead and take a look at the euro. So again, this is a pretty big rejection from those levels. How we react down here at channel support is going to be really interesting. So that's going to be basically at 120. Well, I mean, it would be 120.50, I think, by the time we get there. I think we'd have to watch this spike low. So right here at 120.45, I think that's the place that we have to look at the euro dollar and see, how it reacts. So 120.45 is going to be support. Resistance is obviously today's high, 121.17, but I'll just write 121.20, and that's going to be key resistance. Okay, moving forward. Now, I think in the event, and I'm just speculating here, and definitely not saying this is going to happen, but in order for the dollar really to catch a bid, like especially if you're trading the Aussie or the Kiwi, is if we break through this support, then the dollar is going to gain some strength, and against other currencies. Also, we'd have to see equities moving lower a little too, and that's obviously not happening. So as you can see in the S&P, and we'll just do some work here. I mean, we're just holding gains. I mean, if you look at this from a technical standpoint, I mean, this is just you could probably say that that's a pennant breakout, right? I mean, it continues to stay bullish. Matter of fact, I think we should just do this. Let's clone that. $42.30. I mean, I'll write down 42.08, which is a 261% extension. But while we're above 41.10, that's doable. That remains bullish, and 42.08. So there we go. All right, let's take a look at the cable. So the cable's rolled over a little bit, which is surprising. I have not been trading the pound. I mean, look at this. If you were, in Europe and you were looking at the cable, you're like, man, look at this breakout. Here we go. Right? It's a big, it's a big breakout. Here we go. And then all of a sudden, you just get that reversal. I don't know what to do with the sterling. Just looking at it, like, what do you do with that? Like, looking at that chart, what do you do with it? I don't think there's a lot to do. So let's just deal with what's happening currently. This is the current rally. Obviously, we got a little bit of a false breakout. Let's remove that. Support is going to be this trend line here. Also the 618, which comes in at basically 138. Resistance 140. Well, actually, let's take that back. Resistance today is going to be 139.30, then 140. So I'm going to go 139.30, and we're going to keep it in range. Aussie. So the Aussie still trying to develop the head and shoulder pattern. I'm going to get rid of this. Oops. All right, it's still holding 78 cents. We got to continue to monitor this as resistance. We could reach all the way to 78.40 something, but I think 78.20 is going to cap us on any rally. Support 77 cents or 76.90. And we are in a range. We are in a range. Somebody had said, Blake, you were, so confident that it was going to 74 cents. How's it going to go to 74 cents if stocks don't roll over? That's the whole thing is this Aussie will not go down unless stocks go down, period. Same with the Kiwi. Dollar Canadian's not going to rally past, 126 unless stocks come down. And right now stocks are buoyant. So, that's just the way, that's the way these markets are, is you've got to respect stocks that are at all-time highs. I mean, look at the S&P, it's ripping right now. All right. Channel resistance in the Kiwi is the 618 here at 72.62. Oh shoot, what happened here? Did that not 76.80? Oh, there. Oh, I did have it. I just didn't click on it. Okay, so 72.62. So you're going to write 72.60 is 618, and then channel support is going to be, well, it's, we might as well just reference this number. It's 71.40. And we're in a range. Okay, you know what? Hold on, let me take a look at something. All right. I want to see how the euro acts down here. If it holds 120.50, I'm going to pull my euro short off because this market's just range bound. Okay. Sorry. Dollar Canadian. Okay. So the dollar Canadian, I'm thinking we might reach for 124.16. Resistance is the spike high right here from last week at 125.35. 125.35, and support is at 124.15. That's it. And the dollar Canadian is trading heavy. But notice this, this is the wedge, right? This wedge. And the only way this thing is going to bounce is if stocks pull back. And obviously that's not happening either. So, but you can see how we just keep challenging this trend line support, holding that trend line support. So you cannot rule out a move down to 124.15 right now. Just can't. Dollar Swiss. Dollar Swiss is challenging this downtrend line. So really a move above 92 cents would be pretty bullish. 50% retracement. This is interesting. And this is very similar, not just in the dollar Swiss, but look in the dollar index in general. You know, relative strength has been divergent. I know I talked about this during the week ahead video, how you know, relative strength is divergent, 618 retracement. I know I mentioned that, you know, it seems like we could hit a brand new low below the 618, just kind of shake people out. But I think we're going to be more sideways ahead of the FOMC. I think the same thing is developing here. So support is 91.15. Resistance remains 92 cents. But if we get above 92 cents, we might get a little bit of a squeeze. US dollar, Norwegian krone. This has been one of the bigger letdowns for me. It's like, man, I thought this false breakdown would have led to a rally back, but 840 is resistance. And until we can get back above these, you know, back into this range, I have to put it on bearish. So 825. As much as I don't want to do that, I have to. US dollar, Mexican peso, Salma, as we call her. 1978, resistance 20, and that's it. Holding up pretty well despite the equity market weakness or strength, excuse me. The dollar Mexican peso is holding up really well. But again, it can't break 20 until stocks show some weakness. It's just not going to. All right. Dollar yen. Dollar yen just moved right up to channel resistance and is stopping. I think yields stop moving higher as well. So resistance is 108.35 as it has been. Support now is 107.50, but we could go lower than that. I think while we're below this 108.35, well, I want to say you got to flip to bearish, but I don't know. It might be a little premature for that just yet. Just because stocks are so well bid, you know, stocks are well bid, yields, you know, bounce or they continue to bounce, it might drag the dollar yen higher. I mean, if you look at all the yen pairs, I mean, the euro yen is back at 130.50, you know. They're just responding to a stronger, you know, stock market still. Okay, so as you can see, divergent relative strength, divergent, you know, as price is coming down, relative strength is diverging. It's created a bit of a bounce. So we're going to just mark up today's lows at 90.70 as support. And resistance is going to be channel resistance, which will be 91.20. Okay, let's take a look at gold and silver. There it is. Here's gold. Dale was referencing this broken trend line. I see it. I still think that 1800 is resistance and 1760 is support. And while we're above 1760, we're still playing that double bottom. 1800 is resistance. Silver, 2380, 2680. Something different here. Bitcoin. Now, this has been a hell of a snapback rally in Bitcoin. So you can see false breakdown led to a breakout. Boom, we got it. So now we're at the 38% retracement right now, actually. So you got to be a little careful with Bitcoin here. Do you guys see that? $56,000 is the 50%, and it's also previous support right here. So I'm going to write down that number versus where we're at, but I do think where we're at is significant. Okay. 56,000 resistance. I'm going to put us in range now. Now that we're forging out, see the false breakout led to a breakdown. Now we're creating lower lows. Do you guys see that? Lower lows. I think we'll be supported here at 47,000. But I think we have to flip it to range now that we're making lower lows and whatnot. Anyway, all right, I'm going to leave that. I think that's the bias chart for today. I think we're going to leave it there. Steve, Stelios, how you guys doing?
Hello, hello.
Hey, how's it going?
I'm good. We have 2 weeks holidays now for the kids, so I have them at home.
Oh, wait, are they gone?
I have them at home as well. No, they're here. They're here.
Oh, when do they go back to school?
We have 2 weeks of no school, and then hopefully we go back to actual school and not doing classes from home. So 2 weeks.
See. I was talking to Steve, and Steve said that you guys are really looking at a reopening because it will, you got to do it for summer, right?
For tourism, yeah. Next week, next Monday, apparently things are opening up, and then the schools follow. But let's see.
All right.
I'm
well,
I love my kids, but I want them out of the house.
What's that? Yeah, I actually, so I'll tell you this. I had my youngest son. He finally had a couple of kids over yesterday for the first time since lockdown. I hadn't seen these kids. Both the boys grew like a foot since I've seen them last. They're kids from his school, and one of the families. Everybody's attitude here in where I live is, and this is the attitude of the parents. They just had COVID 2 weeks ago. Dad's still coughing a little bit. Everybody else is over it. They all tested negative. That's why they came over, or the son came over. They tested negative, so it's been like 2-3 weeks or whatever. But they're like, we're just living our life. We're just, we're young enough. We're not going to get affected. We're going to live our life, and and we did. And they just finally got COVID after a year of just saying screw it. You know what I mean? So a lot of people have that attitude where I live. I mean, it's just, we have the luxury of having that attitude, and where I know you guys are in lockdown. I'm sorry, my dogs are going crazy. I'm gonna let you guys take over. Sorry, you could probably hear them.
Thank you, Blake.
All right, thanks, guys.
So I'm getting the vaccine. By the way, I'm getting vaccinated in 2 weeks.
Oh yeah, it's now
Well,
the 70, 75 bracket, huh?
nice one, nice one, man. Yeah, very funny. So, we market just opened 5 minutes ago.
Yeah, initial reaction, by the way, strengthening of the dollar, interesting
Divergence
area
with
to
stocks.
get rejected here for the Euro USD. You can see the
Yeah.
chart here. Of course, we're talking about just a few minutes of price action, so put very little weight in it. And here is the equivalent DXY chart. So I've explained the importance of this confluence of supports at 90.80. We seem to be responding to that confluence of supports. Of course, it's extremely early on the day. I don't consider this to be like a reversal event or whatever. Even if it proves to be one, we'll need to see a lot more in order for us to validate, something like that. Until that happens, nothing has changed. As I said before on FA.C.E, I still see this rebound in the dollar being corrective in nature. I still see the recent consolidation that we have in equities. For example, if we have a look at the S&P, which is like the global barometer for risk, here is the 4-hour chart. All I see here is some type of a probably bullish consolidation, probably a triangle in this case. So until proven otherwise, I think another leg higher and another leg lower for the dollar. Here's the Nasdaq, by the way, sorry, and here is the equivalent S&P chart, which might have already been breaking out. I mean, we as we speak, we're testing the all-time highs at 41.93. I think the next upside resistance is the 161.8% extension of this triangle's range, although somebody can claim that the triangle's range is that one or that one. In any case, we're talking about roughly 42.35, let's say. So yeah, I mean, this is what I see still. What do you think?
Yeah, I mean, we need to get a trigger or some kind of catalyst for things to reverse. So the dollar going higher and stocks going lower, and we don't have it yet. There's going to be one, but what is it? When is it?
Yeah,
Who
yeah.
knows?
We spoke before about the big reversal higher in cryptos, a rebound here in Bitcoin from the 50% fib, a rebound here in Ethereum, which, to be honest, was diverging from Bitcoin. I mean, Bitcoin pushed lower very, very, very strongly. But somebody can make a very good argument here in Ethereum that Ethereum just had like another, there it is, another triangle. And, we might need something like this before we can see a deeper correction. Having said that, I don't know, but my intuition tells me that probably there's at least one more leg lower here in Bitcoin. And obviously, Ethereum cannot really strongly diverge. Here's Dogecoin as well. I mean, just look at that move to 15 cents from 26 cents, which was an intraday move. But I think same thing as well here. Might need to do something like this. But the like it or not, believing in them or not, the trend remains higher until proven otherwise. Same thing, of course, applies, but for fundamentally good reasons. In the case of gold, gold has broken out from this double bottom here. Its target is a little bit higher. Of course, we still remain within the context of this larger corrective pattern. I think that it's a matter of time for us to break out from it and move a lot higher. But until that happens, patience. Same thing with silver. Palladium, I said that was coming at all-time highs as we speak. Platinum, I'm still unconvinced that this is another leg higher. It looks to me, the more I see this type of price action, it looks to me like this type of scenario is also a very, very likely scenario. So I think we're headed higher. There's no question about it. But I think there's a good chance that we need to see one more leg lower before that happens. So be a little bit careful with being overly bullish in the short term. Here is copper pushing all-time highs. Also, that was obviously coming. I mean, that was a textbook symmetrical triangle. Nickel, not sure about this one. Might need one more leg lower. Price action is a little bit more confusing. Although I have to say that in the short term, it's not really doing anything wrong. Probably that was a pennant of some kind. There it is. So what might be in the cards here is something like this, an assumption here. Short-term bullish, but I'm not sure this overall corrective structure. So the bigger structure here might be something looking like this. Okay, so keep that in mind. Okay, cool. Let me see what else we have. Now, it's not a coincidence or a surprise that as copper is pushing higher, same applies with the Aussie. Aussie had, what was that? 2, 4, 6, 7 consecutive days of a consolidation. Its refusal to turn lower, I think, was indicative that the next move would be higher, and that's what we're seeing today, a continuation to the upside. I think it's extremely likely that this move is going to bring Aussie to new highs before we can see a deeper correction. Okay. And looking at the Kiwi and the fact that it has broken through this corrective channel, I think shows that probably this is not a correction. So the same probably applies to Kiwi. Okay. So as you see from various instruments, I don't really see why somebody, at least in the short to medium term, should be long the dollar. And here's USD NOK. We were looking at this last week, broke through the symmetrical triangle, retested it, lower again, right? We actually closed on Friday at lows that we hadn't seen since October of 2018. That tells you all you need to know. And here is USD CAD, which remains a little bit more resilient. It hasn't produced a lower low as you see. But irrespective of that, it clearly remains in a downtrend, right? I mean, look at this. A year ago, 13 months ago, we were at 146 and we're currently at 124. And this has been more or less in a one-way street. 13 months in a downtrend with extremely minor short-term corrections. In essence, it's the
Sounds like
exact
stocks. Sounds like
exactly
stocks the other way.
exactly. It's the exact opposite of what stocks have been doing, and this brings us back to the traditional USD CAD VIX correlation, right? So this is exactly what we have here: stocks in a one-way street higher, VIX in a one-way street lower with minor corrections, and USD CAD has more or less been mirroring what the VIX has been doing as stocks and risk assets keep pushing higher. So I know it's boring, and we keep repeating the same things, but I mean it might sound simplistic, but what I'm trying to stress on a daily basis is that you shouldn't be fighting such a strong trend without extremely strong evidence that you should be doing so. I mean, imagine how many times you've thought that, oh, this might be a turn, right? And it hasn't been. Why? Because strong trends have the tendency of persisting, right? And that's what's happening here, right? So until proven otherwise, and keep in mind, as the DXY is at key area of support, the euro is at key area of resistance, so on and so forth. Don't forget that the S&P is also at a key area of resistance, right? We're still riding the bottom side of this ascending wedges trendline resistance. And if you remember, I've said multiple times that be careful, because I see a lot of evidence in this environment that this ascending wedge might not be a terminal formation, but instead might be a triggering, a technical triggering factor for a last leg higher that's going to be completely of parabolic nature, because the overall environment we currently have is very similar to what I've seen in the past before the markets go completely bananas. Okay, so don't necessarily try to bet against this trend just because we're testing this important resistance at all-time highs with everything being so overvalued, because we might just be in the verge of seeing an even stupider move higher that's going to go completely vertical before it implodes, and then we see a deeper correction before the market can reset to showing something that looks like more appealing valuations to people that are buying the dip and then resuming the uptrend. So the more the days pass, the more my gut feeling tells me that this might be the type of price action that might be imminently in the cards of coming. I don't know. I mean, they might, for example, a triggering factor might be like showing a lot of promise having to do with infrastructure spending plans, etc. The market going, completely euphoric about, oh my God, another like 2-3 trillion, coming through, and just, blowing out any type of stop loss.
That's like
And
Keynesian heaven, right?
yeah, exactly. Yeah, exactly that. So this type of ridiculous move from the lows to the highs that has already, what is it, by the way, Stelio, now? Is it 90% already?
I think so, yeah.
Let's see.
Or whatever, it's just under 100%.
There it is, 92%,
Yeah.
92.3%. There you go. So a 92% move in 13 months, I wouldn't be surprised to see it becoming a 110% move from the lows, a 120% move from the lows within another 2-3 months, right? And then something happening, and markets imploding. But of course, keep in mind, implosion is a very relative term in the following sense. Let's say that we have a parabolic leg that takes us to like 46, 47, 4800 S&Ps, and then you get like within 2-3 weeks a move like from like 47 down, let's say, to 38. That's going to look like the market getting completely destroyed, and in the short term it will, and it will take with it the most FOMO stroke people that have just thrown in the towel and said, F it, I'm buying. I mean, I wasn't buying because it looked to me like it was too expensive, but I can't stand it anymore. I can't stand it anymore to see this non-stop grinding move higher and me not participating. I'm going to be buying. And these are the people that are going to get destroyed in this move, right? But in essence, the market might just retrace back to where it was like 4 or 5 months ago in a matter of 2-3 weeks. So it's not going to be, I mean, if you zoom out and look at like a 10-year picture, it's not going to look like a really destructive move. But of course, people that will have jumped will have joined the party very late once the DJ is leaving and the booze is running out. You know, they won't enjoy that for sure. Hi guys, can you have a look at Aussie Kiwi? Yeah, absolutely. Let's have a look at it. So the Aussie Kiwi, here it is.
I'm personally still bullish. I think it's going to be
Listen,
testing the upside.
Two formations that I'm paying attention to here. Now, it's not easy to know how you should draw this, but something like that. So there is like the bigger formation, you can see it here. You see that this is a long-term consolidation, right? Without a doubt. There it is. So now the big question here is this a double bottom and a bottoming long-term pattern? Or is this, my mistake, or is this a consolidation after this strong move lower that is eventually going to be resolved to the downside? I think that the jury is still out in that. But if we go somewhat in the shorter term, you're going to notice there is an interesting channel here, descending channel, which we are expecting. And if you look a little bit even shorter term, you'll notice that there is an ascending channel within which we trade, right? So as long as we stay within this channel, which currently passes from, let's say, roughly 1068, I don't think there is a short-term reason to be bearish. But on the other hand, keep in mind that there is a lot of resistance around 110. We break through 110, I think we're headed higher. But until that happens, my personal bias, as long as we trade below between 1068 and 110, is neutral. So bottom line, I wouldn't be doing something here, but below 1068, it makes sense to be bearish. Above 110, it makes a lot of sense to be bullish. That's my personal point of view having to do with the Aussie Kiwi. Now, somebody's asking about the IBEX. For those that don't know, these are the Spanish stocks, the Spanish stock market. You will clearly notice here that despite what's happening in other parts of the world, I don't really see anything very bullish. In fact, we had this very sharp, impulsive move lower during the 2008 financial crisis. And while other stock indices recovered and pushed to all-time highs decisively and kept pushing, if you contrast it with the S&P, it's going to be a joke, right? Because equivalently, the S&P is now somewhere there. And look at the IBEX. It just created a long-term consolidation in a triangle, which we broke down from in an impulsive manner. Now, what type of formation do you think this rebound has? My personal viewpoint is that this rebound is showing nothing for the time being that isn't corrective in nature. So bottom line, I would be very, 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 very skeptical. And if you're looking to be long, why would you want to do that? In the sense that even from a relative performance basis, it is more than clear that the IBEX remains one of the weakest markets of the big European or international markets out there. So bottom line, even if it breaks out from there and then breaks out from retesting this broken long-term triangle trend line support, it will still be so much underperforming other major indices. So I think it might be a good idea if you want to be bearish and you want to find something to be short, IBEX would be a good candidate eventually to be short because it's showing a lot of relative weakness. But being long the IBEX, I think there are much better propositions out there, right? That's what I think about it. Now, the question about the CAC, which is the French equivalent. First of all, you can see, no, sorry, that's not the right one. I think, oh, that's why I can't find it. CAC. Okay, there it is. Or we can see a CFD, I guess. So here's the CAC. Just look at it from a relative performance to the IBEX that we were just looking at, right? Just look at how much better French stocks have been doing, German stocks have been doing, right? That's why I'm saying, why would you want to be buying Spanish stocks when they're performing so much worse, right? So now, first of all, the CAC looks a lot more bullish because to begin with, it has broken to new all-time highs. Always breaking to new all-time highs is obviously, until proven otherwise, a very bullish development. Right. Now, having said that, pay good attention to this channel if you ask me. Other upside targets. Oh, 66.40 as you see. Probably the next one, 127% extension of, guess what? The COVID sell-off, right? So yeah, bullish for the time being, unquestionably. Relative performance worse than the DAX, obviously the US markets, and a few more, but better than others, right? Pay attention to this channel's resistance, though. It's not far away. So yeah, that's all I have to say about it. In any case, definitely not any type of technical evidence other than some RSI divergence to be bearish here. Now, clearly, I'm not advocating that you should be chasing any of the risk assets at the valuations we currently have and at the unstoppable type of run we've had with minor or almost zero corrections. I mean, I know we can go higher. I was just making the case for that some time ago, but I don't think you should be chasing it because that's not proper trading. That's not good risk reward management. That's just FOMO. Why the VIX is up and the SPY is up? Yeah, that happens on occasion, right? That happens on occasion. Seeing these type of divergences and many times they do play out in the short term, right? So we do have another short-term VIX divergence here, S&P pushing higher while the VIX isn't pushing lower. Keep in mind though that these type of divergences frequently can keep unfolding for weeks and weeks before they finally produce some type of a move lower. So a VIX divergence is not on its own um, signal strong enough for you to just fade equity strength. In combination with other technical indications, it can be you know of importance, but not on its own. Don't forget that VIX is volatility, right? Volatility, theoretically speaking, is what is the word, Stelio? Undirectional.
Yeah, I don't know what the word is.
Yeah, so theoretically speaking, volatility has no direction. So you get a very sharp move higher that spikes volatility. Why is the VIX though in an inverse correlation with the S&P? Because usually, and from whatever experience you already have in the markets, that should immediately, ring a bell to you. When do you get more volatile moves? When a bull market is grinding higher, or when it actually reverses lower, right? When it reverses lower, that is why usually volatility is inversely correlated to stocks. But as I said before, mathematically speaking, the volatility calculation has nothing to do with direction. It's just that moving lower is almost always happening in a sharper way than grinding higher, right? That's why there is that inverse correlation. Not if it's Tesla. Yeah, that's directionless. Yes, Dimitri, thank you. That's a
Directionless,
word.
yes.
Directionless. Thank you. Yes. Not if it's Tesla. That's a good comment, actually. Yeah, I would agree. Anything that's publicious, yeah, can also move in a very, very volatile way to the upside. That is very, very true. How about Aussie yen? Given the view on Aussie and USD yen, yes. So Aussie yen. Here it is. It has done nothing wrong for the time being, right? In fact, it has broken above these channels trend line resistance, and that is why I keep formations and extend them. Look how amazingly the same trend line that provided resistance in this channel has acted as support in this newly formed symmetrical triangle that we've built once since we broke higher. So I think there is a very, very strong probability that the next move is higher here. Theoretically speaking, we can go in any direction and it's going to be a technical event, either breaking back into the channel or breaking higher from there. But given the price action that we've had so far, I think the chances for a break higher and the continuation, of course, towards the next objective, which is the 88.6% fib at 87, the chances are much higher. As simple as that. I think I covered the things I wanted to say. Are there any more questions or things you want us to visit, guys, girls, before we call it the day? EJ, yeah, sure. That's euro yen. There it is. I would be very, very careful with euro yen still. Now, let's take it one by one. Is it bullish? Yes. Why is it bullish? Because of the most simple and obvious reasons. It has done nothing wrong since May of 2020. It has kept creating higher lows. That is the definition of an uptrend, right? So during the past year, more or less, it has been producing higher lows. Now, as long as that's the case, there is no real bearish argument to be made. But look at the RSI divergence that is persisting. Look also at the possibility of this being an ascending wedge here, right? So I have to say that despite having no real argument why you should be bearish here, I would pay close attention to what's happening here because we might as well roll over. Now, the evidence is not strong yet, but for example, in comparison to Aussie yen, it clearly shows that it has a lot more risks to the downside than the Aussie yen does from a technical perspective, right? And look at the recent period. It's just look at how many candlesticks of consolidations we've had, right?
Plus, we're
So
testing this huge trend
yeah,
line resistance
yeah,
from years ago,
yeah,
right?
yeah. So bottom line, in my opinion, just stay on the sides with euro yen and wait a little bit longer before you decide to do something with it, right? That's what I think about it. Let me see. So BXRX, says Irina. No idea what it is. I'm going to assume it's some type of a stock BXRX. Let's see. This one, Christina, is this the one? Okay, biotech. Yeah, that was a beautiful. I mean, that was clearly part of the biotech bubble, judging by the period of time there. What can I tell you? It looks so horrific, right? I mean, it has done nothing positive. It's scraping the bottom in essence. Now, you look for reasons to be buying it. Not unless it breaks through this trend line resistance, right? So as long as it trades below this one, my mistake. So as long as this trades below this one, absolutely no technical reason to be bearish. And in general, this type of price action and implosion smells of a bubble, and usually this type of markets never ever recover. So just by looking at this, I would find it more likely for this to end up at zero eventually than much higher. Although, as I said, it breaks through this trend line resistance, we might see a squeeze. So, you really like it, or you know something about the fundamentals, which I clearly don't. I didn't even know the company. You might want to take a shot at it once it breaks through this, right? There you go. My pleasure. EVR. Let's see. EVR. Oh my God, what is this? Okay, so I would be very careful here. It's very bullish so far, but this is a triangle, and triangles are usually terminal formations, meaning I think there is a very good probability that this next move higher is the last one before we see a deep correction lower, right? That's what I think about EVR. So for the time being bullish, there is no disagreement with that. It has done nothing wrong. It looks too good to be true. But RSI is diverging, and this is a triangle. Usually the moves out of triangles are terminal. So keep that in mind. SMH, is it a cup and handle formation? Yeah, it might be. It might be.
Oh yeah, that's a semiconductor ETF.
It might be. It actually, technically speaking, might easily be. Right? There you go. Yeah, no disagreement with you. So, you have this trend line resistance, which is also the neckline of this cup and handle formation. Absolutely. So yeah, there you go. Target to, I'm assuming you mean target up to the price objective. Yeah, that's very easy to deduct. There you go. Extended from the breakout area, let's say it's there, roughly 300. There you go. That would be the price objective in this case, around 300.
Steve, can I ask you to have a look at one for me?
Absolutely. What kind of a question is that?
Have a look at it's an ETF called REMX.
REMH. Sorry,
MX.
X.
Yeah, it's a rare earth metals ETF.
Yeah, this has probably already broken out.
Yeah. It's not breaking out convincingly. It's going sideways,
yes,
but still.
That's what I want to say. There is also the alternative interpretation, and if you remember, we've seen that in some of the instruments we've been looking at, like for example silver or platinum. There is also the possibility, and a decent one, that this is a more complex correction and it needs something like this, one more leg lower before higher. but I do think it's going higher eventually. But it might be in need of, because yes, this reaction higher so far is not impulsive in nature, and the RSI is also not inspiring. The recovery in the RSI.
Yeah.
So, is it done
It's a
correcting
question mark.
lower?
Yeah.
It's a 50-50 if you ask me.
I bought after the breakout, and I'm thinking
Then you
about what to
have
do with it.
a good then you have a good entry. Yeah. Okay.
I have a
Then you have
leeway,
a good
but
entry. So you have a little bit of a leeway. We break through this formation and we start accelerating lower 2-3 days. You can get rid of it more or less at break even
yes.
and buy it at a better price.
Yeah. Yeah.
Where would you buy it now? The next question is. Let's flip this move. Okay, that was a perfect 38.2, by the way. Yeah?
It was, yeah.
There you go. Nice confluence of the 50% fib with this high, this short-term high over there at 58 and change. And then we have, I would say 49.50. Let me mark it here on the chart to see how important it is. There it is.
Yeah, that looks pretty good, actually.
So I think these are the two areas of interest. I doubt it will go below this one.
Great. Thank you, Steve. Thank you very much.
My pleasure.
Okay, great.
I think we covered everything. Okay, guys and girls, have a
everybody.
wonderful rest of the day. Bye-bye.
Bye.